Wishing everyone a very happy new year. Wishing a very happy new year to you too, Mr. Anirudh and Bhavik. Today we have Anirudh Garg with us, the fund manager at INVasset PMS. And with him, Bhavik and me, Harshal, the business heads of INVasset PMS, have joined in for an investor Q&A session where we'll be asking Anirudh all the questions that you all have been wanting to ask us over the last few months. Over to you, Bhavik.
Okay. Hello, Anirudh sir. We have divided the questions majorly into two sections. The first section involves about the rationale of us taking a cash call during October, and the second section involves about the rationale of us reinvesting from the second half of December. So I'll start with the first question. The first question is, what specific market signals or risk indicators led INVasset PMS to take a 100% cash call in October? And is sitting in cash considered as an active investment decision at INVasset PMS?
Okay. So, Bhavik, let me first tell you that whenever we talk about the cash call, there's been a lot of, gossip, and there's a lot of things happening about the INVasset cash call. One thing is, why does this occur? We have to understand it. First thing is the cash call is very, very rare in the investment world. Investment managers like us, they do not take cash calls very often. And why is that? Because firstly, there is a point of timing. You can be wrong. As a fund manager, if you take a cash call and the market goes up, as was the case this time, there's a lot of criticism. Secondly, at the end of the day, you are gaining nothing. Yeah. As a fund manager or as a fund, we are not taking, especially at INVasset, I would say we are the only fund in India which will not take a management fees, which will not take a performance fee at that time. So one thing is very, very clear from these 2 points, that when you are taking a cash call, yeah, you are seeing something for which you think that investing right now will not be feasible. Yeah. So what did we see and why did we take this cash call? Okay. So what I say is I look at a market from our own custom made indexes. So there is an index for value. There are a few indexes for growth. There is a master index for growth, which is something I go to very often to see how the markets are. And then there is an index for quality. And of course, safety, we know that's all cash, gold, and stuff like that. So generally, I'll explain you a phenomena. What happens is that in the last 20 days of a fall, last 20 to 30 days of the fall becomes very, very severe. If you look, the fall ended in, say, March, 4th of March, if I am correct, 4th of March 2025. Yeah. In the last 20 days, starting February, the fall became very, very intense. This was the Trump tariff time, the where market came down to, I think, 21,900 or something. But, these are bull market corrections, as was the case in June 2022, as was the case here in March of 2025. These are bull market corrections and not bear markets. But how do you differentiate a bull market from a bull market correction from a bear market? Is that these 20 days of fall that is there. Suppose the portfolio fell from 100 to 70. In the last 20 days, it fell from 90 to 70. Yeah. That is the amount of destruction it happens. The 20%, around 20-22% is wiped out in the last 20-30 days. But generally in the next few days, say, generally in India, it is seen from anywhere between 1.5 to 2 months to around maximum of 5.5 months. It's taken to make up for those losses. So what I'm saying here is from 100, your portfolio went to 70. But in the last 30 days, it fell from 20 days, it fell from 90 to 70. So I want to hit 91 again. From 70, I want to hit 91 again. It generally, at any cost, I believe should happen in what? It should happen in the maximum period of 6 months. That is the time that the indexes have never taken when they are in a bull market. Yeah. So this time what happened was that in those 6 months, we were continuously hitting lower highs, lower lows, and this 91, where whatever amount was, whatever the point was where we wanted to go, it was not going. So we took a cash call consciously that, okay, the markets are not strong right now. Okay. And when did this happen? Earlier in the past, it happened in January of no, January or February of 2018, okay, which led to the 2018 to 20 ka bear market that we saw. This happened in March of 2008. This happened in, I would say, around May of 2000. All these led to big bear markets in India. So I took a call for my investors that it's okay to sit on cash for some time. Markets aren't looking that attractive. I will not lose a lot of things on the upside. It's okay to take a cash call from the side. Maybe if we sit for 3 months also, we'll get, if liquid fund is giving a 4-5%, whatever, we'll get 1.5% to our investors and then take a call again. So are we entering a bear market can be the next question. Yeah. Are we entering the bear market? No, we are not entering a bear market right now because there's another phenomena that takes place. That if 91 is not taken off, we are just taking an example. Yeah. If 91 is not taken off, the 70s taken off in the 6 months. Okay. Then we like that the 70s taken off. So when we saw that another bottom is made in the market, which happened this month, where we started around 8th or 9th of February, we started investing. 10th of February, we started investing. We started seeing bottoming out signals in the market where the small caps and the momentum indicators again started taking the lead back to the market. Till that time, the low of 70 was also not taken off. So what happened in the Indian markets? This was a very, very unique situation. What happened was the bull run that started from 2020 from 7,500 to 26,500. This took the small caps followed by the mid caps at euphoric levels. What we made 128% return INVasset made in a year, great CAGRs everybody has made. All this was extraordinary for a size of a market like India.
Right.
Yeah. So
Yeah.
what has happened? The small and mid caps has become very, very expensive. I'll tell you very small thing, a very nominal. People keep on asking me about my what indicators do you see, what ratios do you see? Okay, I'll discuss one here, which I feel a layman can also understand. We don't discuss them because it becomes very complicated then. Sometimes also what happens is I want to say something else, you will have the same indicator and you will see something else, and then I'll be blamed. So we do not discuss our indicators, but let me discuss a very small, simple indicator. You divide the BSE small cap index, okay, the rate, the price, you divide by the Sensex, okay. Since the
Okay.
conceptualization of the small cap index in, I think, 2005 or something like that, you divide and you will see that it oscillates uh, between 0.5 to 0.65. So wherever it becomes 0.65, you will see that within a few months, the market, starts favoring the large cap, and whenever it goes below 0.5 or something, small caps can come into the flavor in the next bottoming out, whichever it's been. We've seen it over and over again. This time, what has happened is that these small caps are still, I would say, still are above the 0.65 zone. Yeah, just a small, so that our layman investors can also understand. Small caps in India are expensive. Now, what has happened is that in the last 1.5 year, a few events happened. Yeah, due to which the large caps came in, more flavor. Firstly, they were expensive. Secondly, there were growth concerns. Now, when there are growth concerns, the money has to move to large caps. So this shift happened. That what was happening in the growth story, the growth story which was being carried forward by the small caps, it was taken over by the large caps. In this period, all the indicators that we look at, the momentum indicators, the growth indicators, the value indicators, they all started lagging. Why? Because there was a tectonic shift happening in the market. I would go ahead and say it was a tectonic shift. The smart money, the very, very smart money, it saw that small caps and mid caps were very, very distributed. And let's shift our portfolios from small and mid caps to large
That's the
caps.
large caps.
Yeah.
Okay.
So this
Yeah.
is what happened, which led us to rethink the things. It's okay.
Yeah.
What did we, people want to be invested all the time, Bhavik. But the main point is, as a fund manager, if you think things of caution, if I am not able to control the drawdown, then it is a problem. Of course, we have been wrong, and sometimes we will be in the future as well. But the intention is always there. And I think in the overall run, whatever targets we set for ourselves, we'll be able to achieve them.
All right,
Fair
sir.
enough.
So I think that makes it very clear because many investors think that when we are going on cash, we are just investing passively. But I think you now made it clear that going on cash is also an active investment decision at INVasset.
Correct.
Of course, it's a
Yeah.
very, very active decision. Taking a portfolio, taking a defensive portfolio is very easy for for a portfolio manager. We have a knowledge about whatever anybody is buying and whatever is happening, what are the flavors. But for me, I know that if something falls from 100 to 70, to get it back to 100, I need a 50% CAGR. I need a 50% growth. So it's very, very, let me reiterate the fact that whenever we go to cash, it is a very, very calculated call. It is taken with a lot of decision and a lot of homework, pre-homework.
Fair enough. Anirudh, it looks like the decision was morely driven by valuations and internal portfolio risk management models. Do you see anything happening on the global macros which pushed you to take a cash call? And also, I wanted to ask you how frequently does INVasset PMS keeps taking such cash calls?
See, INVasset will take cash calls only in two instances. Okay.
Okay,
One is when the market becomes very, very expensive. We have the VGQS framework: value, growth, quality, safety. Value,
correct.
we buy, let me re-explain this.
Okay,
Value, we buy only when there is overall value in the market and the level of fear is high. Okay. That time we either buy the leaders of the past bull run, which still have not been distributed and are not very expensive, and we see earnings visibility, or we buy blue chips, which we are getting below either discounted cash flow models, or we are getting through historical valuation model. For example, I calculate that currently Tata Motors is, say, trading at 600. For example, I don't know the price, but say 600. But our model says the price should be 800. So from 600 to 800, we'll buy it. Second example, Tata Motors is trading at zero point 0.4 price to book. I am seeing it. This is the minimum 100 days of price to book that it has ever traded in. So we will buy that. Yeah, this is a value, stage one. Now, as the market moves forward, it goes from value to growth. This is one of the major models where when we say that each, uh, I would say every bull run is driven by new leaders. It can be a sector, it can be a company, it can be a group like Adani, Tatas, etc. It can be a particular theme like CAPEX, yeah, in which you get everything from railways, defense, infrastructure, power. Every time it's a new bull run. Why? Because something has changed in the market somewhere. Okay. Something has changed in the market somewhere, due to which all these sectors will either get re-rated, yeah, or will have an increase in their top line and bottom line, due to which they will have growth in their stock price. So this is a growth stage. Here we do technically we have made something called a R square model, where we keep on judging companies against each other. We have around 170 parameters working together. All 170 don't work on every company. Suppose something which is working on a banking company won't work on a steel company. Yeah. So we have the question that we try to answer in the growth stage is that ab tak hua aage kya? You may be a very good company till now, but to get growth, I need you to answer one question: कि ab tak hua, where do you get me the growth for the next 2 to 3 years? I'm only concerned for the next 2 to 3 years here. This is the growth. Now, from a market which was fearful to a market which is in the new bull run, comes a market which becomes a little bit expensive, or
correct.
expensive. Not, let's not say a little bit. It's an expensive market right now. The expensive market belief says that either an expensive market, markets can stay expensive for a very long period of time.
Very good.
What the rule of
Yes.
the stock market is. Now, in an expensive market, you can either grow at 12 to 16%,
Fair
or if a
enough.
bear market comes, you may lose somewhere between 20 to 60%, which we have seen in the bear markets. So I say that let's go in for those shares in which, if we enter into a bear market, we will not be afraid. What are those shares? Stage three, markets are expensive, expectation 12 to 16%, bottom expectation 20 to 60%. I have said to my investors that I will try to control it at 20%. So I will go in for those shares which can stop at 20%. those shares which do not need an external support. These are those Warren Buffett type companies. What are the character of these companies? Very, very simple. Firstly, they have very high quality managements. Secondly, they are either leaders in what they do or are incremental leaders in their market share. They have modes working for them. For example, if you are having a Coca-Cola, it will be very difficult for me to make you switch to a thumbs up. Or if you are a Marlboro guy, it is very difficult to switch to an ITC. Yeah. So all these modes in terms of distribution change, in terms of taste, in terms of quality of the product, in terms of the team that a particular company has, in terms of the marketplace. For example, Reliance. Yeah, in terms of, but generally you need that still these companies should be growing. They
Should be
should
growing.
not
Yes.
be growing companies. That is what the
Mm.
quality is. So what you're seeing is focus is shifting from सबसे पहले it was only money, then money through external forces, now money through internal forces. And ultimately, when the market becomes exuberant, by exuberant, I mean where the returns in the last few months are very, very great, and due to which people do not have the right expectations from the market, and the market goes in for a toss. And as was the case in December of 2024 or September of 2021, or was a case in January of 2018. I have numerous occasions. January of
Volatility.
2015,
Yes.
November of 2011, January of 2008. So this is where a lot of money is made in a very short period. And from an expensive market and an exuberant market, it is very, very difficult to make money. This is
Correct.
where once we will go for cash. Okay. To answer
Fair
your
enough.
question, first we will go for cash here. This is ideally that we would like to go. Now,
Correct.
suppose there happens something in the world. Generally, it will not happen. Psychology says that market में अगर माल बिकेगा तो महंगा करके ही बिकेगा. That
Yeah.
if,
Follows the cycle.
for my investors who don't understand Hindi, if the the stuff in the market is distributed, it will only be distributed when the market becomes very, very expensive. Now,
Mm.
suppose that this is just a belief, but in reality does not go through. What is it? So generally we say that whenever a bottom is made in the market,
Mm.
okay,
Yeah.
if the bottom is taken off, if a solid bottom is made in the market, which your systems, which you have a lot of systems protecting that bottom, if that bottom is taken off, there is something that you do not know is happening in the market. And till that period, you should be a little cautious. Second is this. So how we played it this time was a bottom was made, suppose say at 70. We wanted the market to cross 90.
Correct.
Okay. Market was not crossing 90. I was not ready to gamble with my clients' money. I said that, okay, from
Mm.
this bottom to the upper bottom, say, if people understand waves, from the bottom of wave A, I said that I will wait for bottom of wave C to invest.
Mm.
Okay, wave B. I will wait for bottom of wave B to invest. If the bottom of wave B is made above wave A, then India is all right. Otherwise, what Indian markets were showing, the how portfolios have been, if you have been invested into the small caps, you know the pain. How things have not have been very good for markets overall as well, not for the small cap index also. So
Yeah.
one has to be very, very sure that if you tell your clients, boss, for me, capital preservation is must, then you have to act accordingly. So only two places where I will go to cash. Once, when I see some stop losses being hit or targets not being achieved, which is very, very seldom. You don't see that time. I have not seen it. Okay, the bull run with post Harshad Mehta. Okay, the first bull run in India started in 1987 to Harshad Mehta 1992. Okay, then from April of 1993 to February of 2000. Then from September of 2001 to January of 2008. Then from say October of 2008 to January of 2018, January of 2018. In all these periods, I've never seen growth underperforming, either this was a very tectonic and a sudden shift by majority of the players in the market, due to which small caps, which were the flavor, were just distributed in
Mm.
a
Yeah,
It was a very sudden decision. Had it
correct,
happened over a period of time, our systems would have captured it. But
correct.
what we saw that it happened in an instance.
Mm.
And things of this nature will keep on coming into the future as well. So we have to be ready for it. If you see a behavior which you have seen only in bear runs, even if you lose 2 3%, you're not able to capture 2 3 4% in the market, it does not matter. We have actually, if I took I was looking at the summation as to if I so the stocks that I sold in September, when I bought the portfolio, it was at the same price, and my clients got some return from the liquid fund as well. Yeah, so it's okay. These cash calls are always not given the credit I think they deserve over a long term. And let me tell you one thing. In our life, as I tell my team again and again, in our life, whosoever the new investors are, they have not seen 2008, they have not seen 2000. When you
The
will see
mayhem,
one
yes.
2000 or 2008, 1.5, 2.5 year bear market, then you will know the importance of cash calls. I am very, very prudent. Sometimes as a fund manager, Harshal, I ask a question to myself that
Mm.
why not buy safe stocks when you feel things are not right, and let suppose if I'm holding something like a HDFC AMC, HDFC Bank, Bajaj Finance, Reliance Industries, L&T, and an investor comes to me and says, my portfolio is down 5%, 7%. I can easily say, any fund manager can easily say, I am holding the best companies in India. It's just the market
Yeah,
is like this, and
it's
in the
just the
long
market.
run, market will go up. I don't believe in that. I've been an investor throughout my life, and I have to see do how my systems are designed. Systems are aggressive, but that is what gives us the return in the long run as well. So I'm very, very clear that these cash calls will be a part of the portfolio management scheme in the future as well.
That is a fair understanding because what I believe is even if you are holding on to blue chips, sailing against the tide would never really make you money. That was a fair understanding on your internal portfolio risk management models, and also you gave us a fair understanding on how the higher valuations have been one of the reasons for the markets to stay subdued. But Anirudh, I also wanted to ask you, what is your take on the current global macros? Because if you look at the global markets right now, the South Korean market, the Japanese market, even Pakistan's market is making a new all-time high, whereas India has been struggling. So, what were those parameters that you observed in the month of October? And you've been right, because since you have been sitting on the cash, the markets have not really performed that great. So, what are those global parameters that you see have really affected the Indian markets?
Harshal, let me be very truthful here,
Yes,
As fund managers, we try to be pundits that we know what is happening in the US. When will Donald Trump sign the deal? When
correct.
will China attack Taiwan? When the Russia-Ukraine war will end? We do not know anything, man.
You do not.
Okay,
Yes, it's
let
very
let me be
unpredictable.
very clear. And when we talk on all these platforms, we so you guys told me there's Anirudh, we will not be sharing the questions that you will be asking here.
Yes,
So
this has been.
I will also not have any filters in speaking to my. That is why I've never had con calls, because I believe that majority of the con calls that people talk about, if you're a company specific person, if you are discussing a company, absolutely right. I am a quant person. I do not know, neither I want to know what is happening in the US. Did the trade deal happen? When will the trade deal happen? When Russia will stop fighting? I am not even concerned. When I test my system since 1st of January 1987 till today, I don't know what was happening in India. Was 1990s, there were sanctions against India. There came the Manmohan Singh economic policy, this, that. I am not concerned, Arshil. I am very much concerned about what my systems tell us, what my signals tell me. And
Fair
if
enough.
they are followed without any bias and judgment, I know I will make money for my clients. So sorry to say that I am not an expert on geopolitical
Fair
and
enough.
next level things. And I will, sometimes going on televisions and stuff, if the question is only what do you think that the Russia-Ukraine war will happen, that I will say as a person, as Anirudh Garg. But my models do not. If you're talking about how it will affect my investment strategy, it will not.
Mm. Mm.
It has to be the way it is. I am not a person who can say, okay, Russia-Ukraine war is starting, and then oil prices of that oil well will go up, and the Reliance is buying from that, and Reliance will make that much profit. I am not that intelligent. I have a very simple, basic model, and I believe basic models is what you need. Common sense is what you need to make money into the market, and that is what we are trying to follow. And that is something that has been reflected in INVasset's returns in the past few years. And I think, and I'm very confident, though no guarantees, it should be there in the future as well.
Fair enough. That is absolutely taken. Thank you.
All right. So the last question pertaining to the cash call, Anirudh. Uh, Many investors at that time, once we took the cash call, there were headlines about Nifty hitting all-time high, the bank Nifty hitting all-time high. So, but no one was viewing the other picture with regards to the small caps. So, we would also like to address this question regarding how did the October cash call help to protect the investor capital during this market phase between October to December? Like, did we check any model portfolio that by what percentage did it correct,
As I told
or how
you,
did we protect it?
Bhavik, from where I sold,
Mm-hmm.
as a fund manager, when you are not invested, it is a very, very painful period.
Correct.
You
Mm.
know,
Yes.
and especially when you know that the markets are not that expensive and exuberant.
Mm.
And when you know that the bull market is intact, it is just that the Indian market was, you can call it I call it a fractured wave. India was in a
Mm.
fractured wave. It had to take rest on its bed for some time. And during that period, all you have to do is tracking it day and day. So I used to track it 5 times a day. The maximum from where we sold, suppose we sold at 100 rupees, it went up to 104, 4% up from where we sold.
Mhm.
And where we started buying, it was around 3.5% down.
Okay.
Since we buy in a staggered way, I would say
Mm.
that we bought it. If we would have bought the same portfolio, we would have
Mm.
bought it at approximately the same price, neither a percentage up or a percentage down. Yeah.
Fair enough.
But my concern was not that. I'm not
Mm.
concerned
Mm.
about few percent losing a few percentage points.
Correct.
My concern was that let me recheck, giving it some time that ऐसा तो नहीं है that we are entering a bear
Mm.
market.
Mm. Mm.
Yeah.
Correct.
And maybe this time there is one less wave in the market because the first wave from 7,500 to 18,600 was the biggest ever we saw in India. Yeah. So
Mm.
you
Mm. Mm.
have to take care of these things that somewhere, and maybe I'm programmed like that, or my
Mm.
system is programmed like that, that I
Mm.
cannot accept going into a bear market and saying market so long term में ऊपर ही जाते हैं. Yeah,
Mm.
because my portfolios are very, very, I would say, concentrated. And
Mm.
I know, for example, had you been stuck in the IT portfolio in 2000, to
Mhm.
hit it all-time high, it took 17 years.
Correct.
17
Correct.
years to get to the all-time high for the portfolios that were the favorites there. Similarly, a stock like L&T, it took
Mm.
around 10 years to come back to the 2008 highs post 2008. So you have to
Mm.
take care of these factors, and it's okay to lose a few percentage points, I believe, and then enter. When you enter with conviction. You know, this is my target, this is my stop loss, and this is how I'm gonna create the CAGR in the next few years. So when we have entered right now, we
Mm.
are very, very confident. We have worked on our sectors as we always do. And
Correct.
I think the sectors that we own right now, there'll be
Mhm.
very, very, very few churnings in the next 1.5 year.
Great. So
Let
I
me
think that
reiterate here.
answers.
Let me reiterate here.
Mhm.
I believe from here, the
Mhm.
next 12 to 15 months, say 8 to 14 months will be very, very great for Indian markets. I believe so. Until and unless
Mm.
something again on the flip
Extra.
side.
Mhm.
And
Mhm.
I told it,
External
if you
flips.
remember in the Sonia Shana interview, that if I find signals of caution, I will be the first person to act.
Fair enough. Investing back with confidence, Anirudh, that gets me to the next phase of our questions that we wanted to ask you. We wanted to ask you a few questions on the redeployment phase that you have been recently working on. What changed specifically between October and mid-December that gave you a confidence to start reinvesting again? Just wanted to know those quant parameters for the re-entry into the primary market again.
See, Harshal, discussing those quant parameters that you have learned over a period of time is not very, very prudent also, and I will not be able to explain because I see my system analyzes from a lot of channels, a lot of
Fair
views.
enough.
It analyzes because it's not a unifactor model; it's a
Correct.
multi-factor model.
Multi-factor,
Suppose
yes.
I say the PE ratio is one factor, but
Yeah.
we never see PE ratio alone. We are seeing it
Yeah.
with a lot of factors taken together as a bouquet.
Correct.
So let me, as I explained to you, let me reiterate. Suppose we formed a bottom in March, 4th of March, we formed a bottom. From there we started. When we started, let's say we made a high somewhere last month in say November. Okay.
Yeah.
This is wave A.
Okay.
Then comes wave B, which comes down. Then is wave C that goes up. Then is wave D that goes down. And generally, according to the elite market, is wave E, which is the final wave. Generally, if I have to explain it, this is the easiest way to explain to a layman.
Fair
Now,
enough.
was the wave B coming down? How does the wave B end? Wave B ends when the smaller shares, they start outperforming the larger shares. When you see that overall buying interest is coming in the market. Yeah. And firstly, we started seeing this buying interest coming. When you saw that buying interest coming, and you saw that your growth the growth index that that you refer to again and again and again, it has not taken off 70. That 70-90 thing I was telling you, ऊपर का 90 नहीं निकाला पर नीचे का 70 भी नहीं निकाला. So you believe that okay, maybe my first wave was fractured. Now, since it has not taken off 70, there is no stop loss hit. We are seeing buying interest coming in, and that is how things, according to wave theory are. So what we saw was that a bottom is start being made. Okay, things have started catching up, and we have not taken off the earlier lows. As simple as that. Yeah, and you can see very well from that after we started buying, we have finished buying, I think 3-4 days before only. And many of
Correct.
the sectors that we hold right now, or maybe which we not hold also, have started taking off their all-time highs. We are seeing all-time
Fair
highs on
enough.
the Nifty Metal Index. We are seeing all-time high on the PSU Bank Index, both of which, a disclaimer, not a recommendation to buy or sell. We hold
Fair
them
enough.
as a major part of our portfolio now. Okay,
Correct.
okay. Then we see, even as a based index, I tell you, I think mid cap index is also near all-time high. If I
Yes.
think even
Yes.
Nifty,
Nifty is also yes.
yes. So let's educate investors. Though it's very very difficult job to see that how you see bottoms being made in the market. The smaller indexes, the smaller stocks, they start taking the lead again. Yeah.
Hmm.
Maybe for a short term, but they start
Yeah.
taking the lead again. And there are a lot of other factors like, major indices, they become oversold, or there is capitulation in the market as I think it was 8th of December when capitulation happened in the markets. And then somewhere 15, 16, 17, I don't remember the names. Let me go quickly check here, so this was first capitulation was happened on 9th of December. Then the next capitulation happened on 18th of December. So when these capitulations start to happen in the market, that time you come to know that okay, market is setting up a good base. Can these bases be
Correct.
broken? Yes, of course they can. But you can take a cue from कि अभी तक अगर पिछला low नहीं निकला, the 70 low that was formed, if it is not taken off, generally whenever these capitulations were made in 2008 or 2018 and 2000, till that time, the lows were taken off. So you are very, very sure that, okay, we are in a bear market. Let's go inside. And then you have restructured your portfolio also. You know now, okay, that what is the flavor, where the growth would be, where the money is going, and that is where you invest in. Because you are not operating in very, very 2020 times, you're not operating that everything is very, very cheap. So you have to be very, very
Yes.
cautious and very, very researched and very, very thorough on what you're buying and hold a lot of conviction in what you're buying. And I think, let me go ahead and say, I have a lot of conviction on our current portfolio as I had in 2022.
That is that is absolutely correct. Anil, could you explain capitulation in simpler words for our investors in case for a layman who doesn't understand what capitulation actually means?
Okay, so capitulation is a term. See, let me go ahead and say that INVasset our model. focuses on two things. Okay, focuses on one prime psychology quality, which is greed and fear. So at the top of the markets, you'll have greed. At the bottoms of the market, you'll have
Fair
fear.
enough. Fear.
So
Yes.
what leads to greed and fear? Anybody,
Hmm.
Harshal, Bhavik, you've been with me for such a long period of time. Do you know what leads to greed and fear?
I believe
The,
if in a shorter span of time,
Yes,
if there are
absolutely.
superb
When you
returns like
either make a lot of money in a
hmm,
shorter
hmm,
span of time, or you lose a
yeah,
lot of money,
lot of money.
yes,
that is where the greed and fear comes in.
Yeah.
When the fear is coming in, when you
Correct.
lose a lot of money, as I told you, that you lost 20%, people lost 20% of the portfolio in February only. That is in 1 month, your portfolio was down 20% this February.
Correct.
So that leads to a lot of fear, and this is called capitulation.
Fair
When
enough.
fear is induced due to a lot of fall in a very short period of time, we coin it as capitulation.
Fair enough. Fair enough. Thank you. Bhavik, over to you.
yeah. Yes, so following up to the question of redeployment, many investors had the question that are these triggers right now for redeployment into the market? Are they market wide or are they stock specific? So, are we expecting the entire market to do well or the basket of our stock selection to do well?
Yeah.
Okay, so I am expecting the overall market to do well. Let's see what has happened in the last 1 year. This has been a very unfruitful year, at least for us. So what has
Yeah.
happened in this, especially if we look at the small cap index? Okay,
Mm.
let me just see. Give me 1 second.
It's struggling. It's around 7-8% down from its all-time highs.
No, that's all right. But if I look at the small cap index, uh, it's almost flat on an yearly basis.
Yeah.
Okay, so I believe still it is expensive. So I believe that the small cap index has gone through a good time correction and should not be a very big market underperformer for here from here, because growth, which has been lagging for quite some time, will also now kick in.
Mm.
Okay. Why will the growth kick in? Because we have had very, very good, triggers, global macroeconomic triggers, which ultimately will translate. For example, the income tax cut. Okay.
Yep.
1.5 lakh crores coming to the public. Secondly, GST cut, which is huge,
Which is
immense.
huge.
Yeah.
Yes.
I think the best ever decision taken by the government is the GST cut. So both these things have infused liquidity into the market, especially in the hands of the Indian consumer. Now, what will the
Correct.
Indian consumer do? Indian consumer will either consume or save.
Absolutely.
So,
Safe.
who are the companies who can take your money from consumption? Now, you cannot brush your teeth twice or more than twice a day, if you have more money. So I
Yeah.
don't think FMCG should be the flavor.
Fine.
Cigarettes, etc. The government is very, very clear it's gonna make very, very expensive now. Every time it is increasing in the budget only. Yeah. What is happening is the consumer discretionary, especially the Indian aspiration for autos, and
Yeah.
also the finance that is coming in. There's
Mm-hmm.
now you have the rate cuts coming in. So I think finance should be all right. Maybe real estate would be okay, though we are not invested in real estate.
Mm-hmm.
Should be all right. So this is generally. So overall, the triggers that we have, the relative changes that we have are very, very I would say pan-India on nature. They are not sector
Perfect.
specific. They are very, very
Mm-hmm.
inclusive. So we believe that things should do well. World inflation is under control, which is a very, very good
Yeah.
trigger. Okay. China is moving away from the dollar. That is very, very real. So things
Yeah.
are very, very real. They're sector specific also. But I think we have to be focused more on the market cap basis. That I believe small cap, though it is all right, it has gone through a time correction, but maybe for another 3, 4 months, it may not do that well because it is expensive. But maybe after another 5, 6 months, after going through 18 months, standing at one place, the value may rise, and at the end of this run, we may say rise in the small cap sector as well. But I am confident on the Nifty, the Bank Nifty, the bigger indices like the metal indices,
Okay.
the
Hmm.
capital goods indices, 28,000 crores of SIP
Hmm.
coming in every month, and all these things. I believe that India is very well poised. The
Yeah.
only fear that I had was were we, because I've never seen growth or momentum underperform the market. Since whenever they start underperforming, that there is a question of or
Sign of
a
caution.
cause of concern.
Yeah.
So I think to answer your question, Bhavik, it should be all right for India, and especially we should see rise in some sectors that have not been captured by this bull market in the last two runs.
Yeah. The consumption, as you spoke, is really expected to speak up as the quarter three is all festive season for India and the wedding season for India. So India being a consumption-driven economy should really pick up with that.
I
Also,
think
the
every
GDP numbers
time
are in
it is
line.
a wedding season only, no?
Yeah.
Third quarter. But overall, I
Yeah.
think GST will have,
Yes.
what GST cut does, Harshal, is that it
Yeah.
induces a natural phenomenon to spend.
It's a spiral of money flowing in.
Yes,
Yes.
it is the very right way. Rather
Correct.
than giving money back to the people, you do
Yeah.
not take it from them and then you induce the buying spiral. It is not the job of the
Mm.
government to spend for the people. It is a job of the government to introduce spending, natural spending in the business.
In the
And I
people.
think
Leave money in the hands of people.
the waves of this will be very, very great for India. And going ahead, I believe there'll be more, uh, I would say, reforms like this. I'm very happy with the GST reform, and I think it will be the biggest catalyst going forward for the next 1.5 year.
Fair enough. Thank you so much. The view is absolutely taken. Anirudh, moving to the third section of the questions that we had, the current portfolio construction and the risk management that now we will be following from here. How different is the current portfolio construction versus what it was before the October cash call? What are the changes that we have made this time?
Okay. See, it's very, very different
Fair
because
enough.
we are seeing, uh, so it's a trade-off. Firstly, we are trading off, we are not buying small caps right now.
Okay.
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 We
Yeah.
want to play it a little safe because
Mm.
we are still not above that 91 level that we tell you. So until we are above that, we are not entering small caps at all. Secondly, we are finding very good opportunities in mid and large caps. So we are sticking to the mid and large cap part of the. Firstly, it provides us a little bit security. And then you're seeing very, very good tailwinds here. For example, again, worth mentioning here that sectors, stocks, groups, themes that we talk about are not a recommendation to buy and sell. We are just doing it for educational purposes of our investors. So, firstly, what we are seeing is global inflation are coming under control. And also, apart from that, not de-dollarization, but the biggest country moving away from the dollar. When one country who's the leader, there are only two leaders in the world right now. One is the US, one is China. When the biggest manufacturer of the world starts moving away from the dollar, other countries then follow this. Okay. So we are seeing a lot of interest in the metals. Why? Because China is the biggest player in metals right now in the world. So it is moving its economy to a metal-based, it's keeping its assets more metal-based. Then we are seeing a lot. I am being in the stock market, knowing stock market for such a long time. I think we are going through a epic uh, I would say, phase where
Yes.
all these companies, which are either into broking or into distribution or into AMCs or into exchanges, should do phenomenally well because Indian consumer now knows that giving money to a bank is actually just fighting inflation for them and nothing else. Maybe in
Correct.
some cases not fighting inflation also. So people are now treating, we have moved away from that FD culture to now an equity culture. The same uncles who used to sit with an FD a couple of decades ago are now sitting with their mutual funds.
With the
Yeah,
mutual
that
funds.
is something
Yes.
SEBI, and we should be very, very, very proud of Amphi and SEBI that it has over a period of time with gradual mutual fund Sahi Hai campaign
Yes.
introduced the
Yes.
Indian middle class and the Indian lower middle class to the mutual funds. Everything was being taken up by corporates, you know. Now you do not visit your old uncle shop near your home where you go and buy a bread or a butter or a packet of milk. Everything is being ordered through Blinkit. The corporates are taking away from us, and we are investing in their success. Um, so I believe that things are very, very different this time, and a lot of new sectors have come up in India. Mutual funds is one, metals is one. I'm very confident on the automobile theme as well, though I believe it is a little bit expensive, but this GST cut was very, very huge for them.
Yes.
Somewhere
Right.
hospitals are all right if you look at it. The beds are increasing. India is a growing population.
Yes. Yes.
Then the GST cut that has happened is fueling the hospitals because agar, if you'll sell the health policy, the first beneficiary will be a hospital. Yeah, and then you have these new age companies like Paytm, Zomato. We may have holdings, we may add to our holdings, we may cut our holdings, but these are companies that are worth considering, giving a thought. You, of course, whenever you're buying, people say that, you're buying a company, you're buying it forever. I'm not buying a company, man. I'm buying a stock, and a stock has a PE and a P price to book. And if I buy something which is growing at, say, even 30%, if I buy it at 300 PE, then, to get it to my investment level, I need 10 years, as
Absolutely.
my very dear friend Siddharth used to say. And there are a lot of sectors. Our portfolio is very, very different, very less concentration to small caps. We may be wrong here, but our funda is very, very simple. Always, always, always protection above growth. And I believe that we'll be successful in this.
So from this, Anirudh, what I can gather is the sectors that we're looking bullish upon is metals, finance. You have your AMCs and distributions. You have hospitals and a few new age companies, and one is auto, which is going to benefit from the rate cuts and the GST cuts. Also, what I can gather is we're looking more towards the large caps and the mid cap, large cap space rather than the small cap phase where the valuations and the prices look attractive, right?
We are looking at good, we are looking at, okay, so this was a growth, where we are
Yeah.
finding growth. And I believe the AMCs are more, AMCs and the stock market people are more quality people. For them, it is happening internal, and now there is no external force that can stop it. We are
Hmm.
finding a lot of value in the PSU sectors as well, PSU banks, to be
Wow.
precise. We
Okay.
believe PSU banks, the sectors that they cater to, their lending mechanism, how it is much, much better from than what it used to be in 2000, 2008. And now all the NPAs are gone and everything is behind them. And we are seeing a lot of value in PSU banking names as well. Apart from them, we are seeing very well managed NBFCs and private banks, the mid-sized private banks also. We believe that there will be a good value addition from here for the next 1 year.
So you're
So it's
seeing
a very
PSU.
balanced portfolio to say. Okay, if you want to talk about the portfolio, it's all our investors. So we have currently around 20 to 25. I cannot tell you the exact number, but around 20 to 25% we have metals, 20 to 25% we have PSU banks, around 10% we have private finance, either NBFCs or private mid-sized private banks. Then 10% we have autos. Then around we've talked about metals, we've talked about we have around 20-25% AMCs, and then
Okay.
maybe leaders of their particular sectors like a food delivery company, like
New age
a CDMO
technologies. Yeah.
company, like maybe just let me have a glance at my portfolio so that I don't miss anything for you guys. I want to be very, very detailed for my investors. 1 second. I think I was asked for a request to switch on the actual portfolio so that everyone can view. We have switched it on. It's your portfolio. We have finished buying, so you are we are okay that if you look at it. Though my advice is do not be biased for particular sectors or stocks. If you buy it on your own, buy it as an entire portfolio because a lot of thought has gone into balancing the betas and expecting the alphas from here. And yeah, I think I've answered more or less the all the sectors.
Sectors,
Yeah,
yes.
yeah. So if we say around 5%, we have in leaders of their particular sectors, 10% in, as I told you again, in private NBFCs and banks, 10% in what do you call them? Autos, 20 to 25% in AMCs, 20 to 25% in metals, 20 to 25% in what is this?
New age tech companies.
Yeah. Okay, one more sector was there. Speaking it again and again, I've lost the track only.
Not a problem. Anirudh, so just taking a heads up that you're preferring PSUs in
Sorry, yeah,
PSUs in
20 to
banks.
25% was PSU banks, yes.
PSU banks. So yeah, you're preferring 25%, you're preferring banks with PSUs, and you're preferring private players in NBFCs. You're not going for private banks, right?
I am going for private banks, mid-sized.
Mid-sized. Fair enough. That answers my question. Thank you so much.
Yes, so Anirudh, this brings me to the fourth section about what the investor should expect or what our market outlook is, which is during 2026 and beyond it. Um,
See, this is a
like
very,
we've
very
raised the bar in 2023 and 24. So, many investors are expecting a similar kind of performance. But if we speak realistically, what should they expect in the next 12 to 24 months or in this cycle?
See, Bhavik, I'll tell you very, very frankly. Uh, I am very, very confused to answer this question. I'll tell you why. It is not that I don't have clarity, but I am very well bound with SEBI rules and I am not clear what people do. SEBI explicitly says that you cannot give outlooks. Okay. And I have seen many people giving it. And then if some outlook is not achieved, people holding it back against their fund managers as well. So I believe that in the long run, we should be the target that we set. Let me give this statement very, very clearly that there is no guarantees. We do not guarantee anything, but the target that I set for me and my team is that if Nifty is a 12 to 14% product, which grows over 3 to 4 years, we should do 1.5 to 2x of Nifty in that period, though there are no guarantees. We have done it in the past, but past returns are not an indicator of the future returns. As a fund manager, if you're asking me to set, I can only say this is a target I set for myself. I do not know what will happen in the future. Yes, it has held true in the past always. Whenever somebody is invested with us for 1.5, from 3 to 4 years, we have been able to do 1.5 to 2x. But will we be able to do it in the past? We are confident, but we do not assure you anything. In terms of risk also, the guidance that we give is 20%. But again, there is no guarantees at all of this. Please consult your financial advisors before investing. But one thing that I always ask my investors, please, you have to be with any fund manager or any mutual fund for at least 3 to 4 years. If you leave in between, or if you are here for 6 months, 1 year perspective, then you will be the person who will be losing. Yeah. So every strategy, any strategy in India, I have seen people tend to do a 12 to 18% CAGR at least, until and unless you don't have anything in control. So I believe 1.5 to 2x of Nifty, which comes in 18 to 28% CAGR with a 20% drawdown in 3 to 4 years is a target me and my team set for ourselves. And we do not give a guarantee, or nobody at INVasset gives a guarantee. As equity markets, there can never be a guarantee. And yeah, that is what our guidance is. But I believe this should be a year which should make up for the last 1.5 year of any scheme or fund in the Indian stock markets.
Thank you,
It should
Anirudh.
make
Over
up
to you,
for the
Harshal.
last one. Yeah. Yeah,
Yeah, yeah,
which should
please.
make up for the last 1.5 year, Anirudh, as you mentioned. That brings me to the next question: that is it really a good time, according to you, to present some new funds if any of the clients are looking forward? Because we have been receiving this query multiple times that is it a good time to invest fund? What does Anirudh think? What is his take on the markets? So do you think that the markets, there's a lot of steam left from here for the fresh funds to be infused?
Absolutely, yes.
Okay, okay,
I
fair
think
enough.
I
Yeah,
request all my investors who want to come when I prove after 3 months that the last 3 months were good. Rather come right now or maybe take away some funds after 3, 6 months. What happens, Harshal, is that people wait that, okay, let
yeah,
this fund or this scheme prove itself.
perform.
You should look at the
Yeah,
last 3 years, 5 years data. And especially when the fund manager says that he's confident, you should come with whatever amount you want to come at that point of time. Because especially when I'm talking today, I'm seeing that markets have made a very formidable bottom. And my targets for the Nifty for December 2026 or January 2027, that is exactly 1 year from today, is around 33,000.
fair enough. Fair enough. That's quite achievable on Nifty, because if you look at Nifty, Nifty has not been really performing in terms of global markets. So it should really give that final move that it has been waiting for. But Anirudh, there is one more question that I have. Lot of clients are concerned about the high churning in the portfolio that we do. How do you plan to address that? And in the next coming year,
There will
saying
be
that you've been very,
negligible, there
yeah,
will be negligible to very, very low churning in the next 1 year. Sometimes, Harshal, why
yeah,
you have to churn?
correct,
Firstly, when do you churn? Okay, we did not
yeah,
churn anything, almost anything from, say, October 2022 to June of 2027. When the markets become very, very expensive, that time you have to churn because you want to move into the safer stocks from the growth stage to the quality stage, where you shift from very, very expensive stocks to you shift from those Warren Buffett type stocks where you
correct,
focus on the 12 to 16% and 20% drawdown. One is
correct,
churning happens there. Secondly, when you go from a safety stage, go from a quality stage to a safety stage, the churning happens there. The clients are very, very right that from February till September, there was a lot of churning and it was very, very unnecessary. But why did that happen is another major question, because there was a tectonic shift happening which has not happened in the past. That
hmm,
totally the mid caps were neglected and they came to their almost 2022 low, 2025 lows, and
hmm.
Nifty was hitting all-time high. Can you expect a market where, the
I
most
understand.
flavorful thing
Yes.
is hitting its low, and the thing which was not in favor is hitting its all-time high? So this was once in a phenomena, and I can assure you that there'll be very minimal shifts going forward from here for the last 1.5, for the next one, 8 months to 12, 14 months whatsoever. Post that, we expect some shift, and that shift, I tell you today only, again, we will be going to quality and safety, and that time churning will happen again. I think we are at that phase exactly where we were in March of 2023. So post from March 23 till say June or July or even October of 2024, we did not do any changes where the growth stage was playing at its best. Now I think we are in that stage, and churning should not be an issue from here.
That answers my next question that I was about to ask you, that the current portfolio that has been made, rather than a short-term trading bet, it is made with the structural tailwinds keeping in mind. So I think the next,
We do not ever have short-term trading bets.
perfect,
It's
perfect,
always it's
perfect,
always taken in good faith with the
correct.
model working. But if you see that the model should work in a particular way and it is not working, it is your duty to take a step back. I know that because I know the model. We are not always able to explain it to the investors because becomes very technical. But yes, from here for the next 1 year, I am confident, though giving a disclaimer again, that if
Correct.
things turn south, it is our duty to take the decision accordingly. What is the probability? I think next to nil right now. But that this is the stock market and things can change
Markets
anytime.
always tend to surprise.
Yes. And what is the point if we have to get our bias in between? Sometimes, the very best of systems, let me tell you one thing, Harshal, and I think to all our investors, the very best of systems, there comes a time where they become sideways or even give you a little bit loss in a short run. But if
Correct.
you keep following your system, which you believe that is a 1.5 to 2x of Nifty in the long run, has delivered more than that in the back testings, has delivered more than that in the last 5 years of your performance in the market, where everything was recorded on a day by day basis. Every system has its fallacies. Every system will have times where it will be tested. But again, it has had these periods. Do you believe it is not has these periods from 1st of January 1987 till today? It has
I have
had these
witnessed
periods.
one. I have witnessed
When you
one
do
which,
it in the past,
yeah,
your algo runs 1 month in, say 1 hour or something. Yeah. And everything is done in an hour, but when you do it in the real time, you have to bear with it for the whole month. So that is
correct,
how
yeah.
the difference is 30 days to 1 hour, or maybe sometimes lesser than that as well. So every system has its policies, but I'm very, very confident in the system which has created wealth for me and my investors over the past. It will keep on creating. Right now, if you talk about me, I am 100% in. And I think for maybe more than 100% in also in some portfolios of ours.
Fair enough. Bhavik, before I hand it over to you, I also wanted, Anirudh, I wanted to ask you a question. I wanted to have a clarity on this thing. While we were sitting on cash for the last 2 months, were you as well sitting on 100% of your capital on cash? And now are you as well deploying your 100% capital right into the same sectors and stocks?
See, Harshal, I think it'll not be nice to answer this because my capital is not something that the investors should be cared about. But since you've asked it, let me tell you yes. And let me tell you a very funny thing that my father always says to me, that every year that I look forward to, I am always underperforming my investors. Why? Because in my own portfolios, I may take some human call decisions, something that I like, something that I don't like, something where my greed and fear pays it. But for my investors, I don't. Yeah. So
Fair enough.
to answer your questions, yes, I was. And really, it has not made a lot of difference. The portfolio that we exited, if we were holding it today and converting it into the portfolio that we wanted to, it has happened almost on the same value that we wanted our portfolio, that we sold the portfolio at. So, as a fund manager, I am very, 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 very quant driven, system driven things about when to buy, when to sell. And if I'm saying right now that how my system is telling me that the next 1 year should not have a lot of churn, you will see that in the progress going ahead, as the portfolio goes ahead.
Thank you so much. Thank you. That answers majorly all of my questions. Bhavik, over to you.
Yes, so Anirudh, we would like to end this webinar with end this Q&A session rather with one final question as to what would be your key message to all those investors who have stayed patient with us during this phase.
See, I would like to firstly thank all my investors who have been with us. Let me tell you that, okay, first of all, not me, judge anyone on a 3 year performance. Always, always, always judge anybody on a 3 year performance. If you leave in between, it will be your loss. One of my very, very old and very, you know, a very successful investor of mine told me that when I was worried about, my investors when taking a cash call, told me that you are doing a fund manager's job. He came forward and told me, Anirudh, you're doing a fund manager's job. You're fulfilling a fund manager's role, and the investors have to fill their role. So I asked the investors to stay calm for 3 year period. If you stay calm for a 3 year period and still the fund is not able to perform well, you should 100% take your money back and invest somewhere else. But if you take, it will be like shifting lanes on a road if you do it in between. Yeah. As
Right.
far as your expectations from us are, when it comes to, one question that both of you have asked me again and again, and even the other members of the team is, Anirudh, why don't you take con calls? See, my
Yeah.
thing was very, very clear that if I take a con call, I am not gonna give gyan in the con call. We are living in a world of chat GPT where giving gyan is very, very easy. I want to speak my heart out. I want to speak my heart out. When I speak my heart out, I cannot be, saying, suppose say any company that, wow, what a company, this management, that manager, and tomorrow my quant system says that, okay, we have to get it out and get another company in, then all of it goes for a toss. So I have not done con calls because I did not want to be, I never wanted to lie to my investors on how I buy their stocks or how the portfolios are managed. I wanted to be very, very ethical and very, very straight in the way that we buy it. But our way is a quant system, which is very, very difficult to explain. How can I explain my quant here? And I can just tell you what relative changes we are seeing. But how can I explain that what value I'm seeing in PSU banks and stuff like that. So it becomes a little bit difficult. But yes, I would say that, okay, we've started this Q&A session. We will improve it in the future. If you have any
Yeah,
questions from us, mention them in your groups. We are there. We are there to answer all your questions. My
absolutely.
email
Yes.
ID is anirudhgarg@invasset.com. You can always put in your questions to me. I make sure that I answer all the questions. But apart from that, the fund managers call is not only the duty of the fund manager is not only to answer the small queries of the investors. Please, I want to devote my time. I work 9 to 7. My 9 to 7, I want to devote majorly on finding the right stocks for you to invest in, so that we can invest for you, rather than going in for just answering queries on why I did or what I did. If you have believed in us, believe with us with full conviction, give us 3 years. And I think and I'm confident that you will not be disappointed, as has been the case in the past. And thank you all for trusting us. We will do our 100%, give our 100%. Any feedbacks, I'm always available on my email ID, which is anirudhgarg@invasset.com. Thank you all.
Yes, it
Thank
is.
you.
Thank you so much, Anirudh. On that note, I would want to end this, and it has been really helpful. All the questions and queries that we had from the clients, we've asked you, and I think we've got a great answer for them. Thank you so much. Wishing you all a very happy new year. Wishing you also, Anirudh,
Thank
a
you.
very
Wishing
happy new year.
everyone a very happy new year. And let's hope that this will be a very, very good year for the equities. I'm very, very confident.
Thank you so much, Anirudh. Thank you, Bhavik.